Hello traders and welcome to FreeFX. Today I'm going to talk to you about EUR/USD again. This is just to kind of familiarize yourselves with how I sort of analyze the markets, etc. But if you're first time watching my videos, basically I'm a private trader and I just concentrate on currencies, and sometimes I also trade other things, but for the most part it's currencies. Today I'm going to talk to you about EUR/USD because there's quite a lot happening in the next few days, stroke weeks, but essentially at the moment we're quite kind of stuck in a particular situation. So I thought it might be interesting to kind of dig deep under why price has stuck like this. So let's go onto the charts and see. Here's the monthly chart that I've displayed for a few videos now, and it shows on the right hand side here that we've come out of this channel and broken through, but we're stuck around these parts, and that really means that there's not much progress for a variety of reasons. Immediately to the left here, if you look back to February 2018 and January, you'll see that basically exactly 3 years ago we've had these levels about 123, etc. We are quite close to those levels, and that means that possibly there's some kind of resistance there, although we don't know exactly why, because 3 years is a long time even for currencies to come back to certain levels. But there is some kind of resistance there. It could be just temporary. I said in my previous video that we could be looking at bulls being in charge for EUR/USD, and obviously now is perhaps something to look forward to have a bit of clarity and direction, but we don't know that for sure. Let's move on to something else now. Just to dig deep, I just wanted to look at other things, and I previously looked at futures, and today actually also going to look at something that I've mentioned before, and that's your open interest heat map for CME Group. They have the options for currencies and the majors, and EUR/USD here shows you from the price point of view all the calls and puts, the different contracts, expiries. For the current lot of contracts, you have your 21, we're just above 121 at the moment, just going back there to show you, we're 21, 27, so the next one is 21.50 with a big slab of contracts there. Then we've got 122 and 122.50, 123 is even bigger than 121 and 22. So we're actually, almost 200 pips below that, our next kind of round number level. And that means that there's quite a lot of pull or interest at 123, but we obviously don't know what happens between now and then. Do we get to 123? Is the expectation that price will continue, as I was saying. So handy to keep this table open to see what happens. As you can see, there are a lot of puts at 120. A lot of puts 120, almost equivalent of the calls at 123, but we've visited 120 recently, but not quite. An interesting thing going back to the chart, just to kind of finalize that, this is the monthly, so you can see for February this particular candle is quite a joy to behold. It's basically a doji. We've got a flat body, just a line basically, and then we've got a thin wick below. The wick below is actually longer than the wick above, which suggests that we're selling before and that got absorbed by buying, and we are basically back to square one. We are, however, on the 15th of February, almost exactly, just over the halfway mark for the month. And so, if the buyers are in charge, they're taking their time. So I'm not really sure. I haven't seen much evidence of strong buying. But obviously, if we look at November and December, there was strong buying there. January was a little bit of a halt, and February perhaps is just sort of buying power being gathered. Now, there are some events, so let's talk about what's coming up to give us a bit of hope. If we can't find hope in technicals, there isn't much there to look at in terms of direction. We might want to look at fundamentals a bit going forward, and we've got a few things happening both on the Euro side and on the Fed side. So in March we have the 11th is the Governing Council, MPC monetary policy meeting in Frankfurt, and also the press conference there from Lagarde. And also in 2 days' time we have the non-monetary policy meeting in Frankfurt, which may or may not have any impact depending on what they say. The Federal Reserve, on the other hand, has nothing in February, and the next meeting of note, obviously, is the MPC meeting, the FOMC meeting. That's on the 16th and 17th of March. So on the 17th, we'll get projections, etc. Because it's a quarterly meeting as well. We'll get a press conference and everything from Powell. So that's where we are. So there isn't a slew of data from central banks coming out in terms of publications like that. We also have from the from a euro, from the ECB point of view, we're not expecting any rate interest changes. There's also the idea of stimulus, etc., what impact that will have. From the Fed point of view, there is the CME Fed WatchTool, which looks at expectations and probability of rate changes in the upcoming Fed meeting. And you can see 17th of March, there's a 100% chance of the current target rate remaining the same, no change. So essentially, if we don't expect change, then whoever is looking at this is probably looking forward to the next meeting, and then one after that, several months ahead, really. So in essence, what we are left with is this bigger picture and the current indecision. So very difficult to trade short term, and if you put it on a daily, and always got to sort of do your multi-frame analysis. Multi-frame analysis, this is where we are. Look at the last 5 days. Obviously today is Monday, and it was Friday, Thursday, Wednesday, Tuesday. So it's almost been a week of after these big candles there from 119.50 all the way up to 121, just past 121. So we had about 150 pips in 3 days, and then we had 5 days of nothing. You can see that's just minimal, and you can put an ATR on it and see what the average range, but really you can just see that there isn't really much improvement. These levels here are the same. Look back as December, so it's been 2 months of pretty much chop, because if you look at it on a weekly basis, you'll see that how clearly that shows in the chart there. It's not been particularly worthy of momentum there. So trying to trade that in a narrow range is quite difficult. Depending on your trading style, I do find that particularly tricky, because you can't really put any bets or sort of forecast any movements. And these big moves here from 108 up to 118, or well, that is a big move there, So we had the sort of the pandemic moves, as we call them. That's, if you want to put it into percentages, there's your percentages there. So we're going, what's that, minus 6.8, let's call it minus 7 to plus 1. So 8% move there between May and August. So three months. That's pretty decent for a currency pair like this, which is super liquid and not particularly volatile. So but you can forget that at the moment, so it's really quite tricky. I mean, I did do an uptrend line there, but I think we kind of stalled there, not really sure that that's even valid anymore. That's us, really. All my videos are available on my YouTube channel, so please watch and like, comment. I look forward to seeing you in my next video, and happy trading, stay safe, good luck out there.